Now, a second point is liquidity. But what's liquidity and why it's important? I think liquidity is the most important part of marking an institution supply and demand zone. But what's it? Liquidity is the fuel price needs to continue their move, and smart money needs liquidity anyhow to fill their orders because they have big orders and they can't be filled by just a market order or a limit order. They need liquidity to get swept before entering their order. But how to market and where liquidity is so that you can get liquidity before marking a point of interest. So liquidity sits at the retailer's stop loss. So where retailers commonly enters, retailer commonly enters on double top, double bottom, trend line, support and resistance, or highs or lows. So that's it. So for example, for me, how I see liquidity and how I wait for liquidity sweep. So before marking liquidity, I just ask myself a simple question: if I was a retailer, where I would enter and where I would set my stop loss. So always ask yourself this question and then see where liquidity is and then mark it and wait for it to get swept. So in this chart, we can see that this is a double bottom. So below this, there is retailer stop loss. So here is the liquidity. And then again, we have a double bottom. So below this, the liquidity is, and this is our high, so above this the liquidity is, and then again this is a double top, so above this the liquidity is. That's it. Now we will mark this as a liquidity. Okay, now this, below this, here is liquidity. Let me take liquidity. Okay, then again below this liquidity, above this liquidity, and above this liquidity. So like this, mark liquidity before entering your trade. Okay, and then wait for it to get swept. So we are trading on bullish market, so we want this liquidity to get swept. So we are waiting, price came here, swept this liquidity, then gone down, again sweep this liquidity and then gone up, and then give us a bullish breakout structure to the upside. Now you can see that how price came here, swept all of this liquidity and then gone up and then swept all of this liquidity, and this is how price moved. But having liquidity and having breakout structure isn't enough to mark a point of interest.